going on, guys? So wanted to hop up here and do a stream because I know there's a lot of fear in the markets and a lot of people are worried is the full-year cycle over and so forth and so on. So I'm going to give it my best look. I've been really busy lately, so I haven't been able to do many live streams. So the first thing I want to talk about is this. You've seen an RSI divergence. You know, people showing these pictures of last cycle, kind of like a similar, like a top, and then, well, we know what last cycle looked like. All right, showing this top over here and the top and the RSI divergence, and they're showing these pictures side by side, and you know, scaring a lot of people. There is some things to be bearish. You know, it's not like a slam dunk. Like, yeah, we're just straight up bullish. You know, tomorrow, you know, next week, all this is going to be behind us. Which, I mean, I hope so. But there is some things to be worried about. But when you hear people saying this price is programmed in, that price is programmed in, that's all bullshit. There is no such thing as something being programmed in. You know, the market is like a wild animal. You know, you can understand like a certain animal might have a tendency to do things, and you can make your best decisions, you know, so you don't get attacked by it. But at the end of the day, it's got a mind of its own. The market's the same thing. You know, technical analysis, different ways to go about it can definitely help you, and nothing is a guarantee at the end of the day. And people talking about programmed in, programmed that, you know, well, at least to my knowledge, Bagdanoff isn't actually running the crypto market and dumping on all the Wojaks. So, well, let's look at some of this stuff. All right, let's look at this part here, because this is what scares people. All right. So first of all, it wasn't this divergence. It wasn't like the top to this top. So it wasn't like a double, because look at where this topped out here and where the RSI was, and then when it topped out over here. That's not even enough to call a divergence. The price was flat, just barely went up, and then just barely went down the RSI. So they're counting this peak over here. All right. So a couple things with that. Let's look at how long this was to this one here. 308 days. 308 days and a drop from almost 96 to about 70. So a pretty big drop over less than a year. One second. Do you think we keep dumping here from? I'm gonna look in the daily. I'm gonna try to cover all that. Just bear with me for a second. So this dropped. RSI 26 points, 300 days, and you know, counting this one, the price was a 70% gain. All right, so then I'll write those figures down just so we keep them in mind. So 70% gain, 300 days, and 26% drop on the RSI. And I was aware, you know, I saw this last bull market, and it was when I sold here at this top here, it was a factor in my decision, but it wasn't a big factor. Al Brooks is who I model a lot of this way I try to do things after. He doesn't look at RSI at all. He may like occasionally refer to it, and that's what I try to do is refer to it. He's like, what his quote is, all these indicators, they're all based off of price, so you might as well just look at the price. I've also seen a lot of people talking about volume, and I can talk about that too. What Al Brooks says about volume is a false god, that people say like, how can this be happening? The volume doesn't coincide. Who cares? If the price is saying one thing, then that's what matters. Volume is useful. I'm not saying that these tools don't have their place. They do have their place. And another thing I want to bring up here, this right here, this other oscillator, and you guys know I don't really look at a lot of indicators, but I know how to use them. So this oscillator right here is called MFI, Money Flow Index. Matter of fact, let's I'm gonna look that up because people aren't as familiar with that. I'm sure. All right, the Money Flow Index is a volume-weighted momentum oscillator that identifies overbought and oversold conditions. So it's similar to the RSI, but it takes volume into account. And somebody that taught me some things in my earlier days said that MFI was better to look at than RSI. You know, it's not as well known. I have found it to be more accurate when I've used these oscillators. So it did have a divergence on MFI as well. Not as big of one as you did on RSI, but you had a divergence on MFI as well. All right, so let's look at what these people are screaming about over here with this RSI divergence. And I've talked about this in Telegram for a long time. It's not like I haven't seen this RSI divergence, but anybody, you know, who trades off of RSI divergences, normally, I'm not saying it can't be a useful tool, but if you're relying on that a lot, you tend to lose. Like the biggest trade I ever lost, I used the RSI divergence as a big part of what I was looking at. And yeah, because it can just keep going. It can be a divergence now, but then price starts going up, then all of a sudden, you know, it's not a divergence. Another thing is if you got high readings on the RSI, like over here, it's 87, about 87. Well, if it was 87 now, yeah, it wouldn't be a divergence, but there'd be no room to go up. So it's like on one hand, you can say it's a divergence, but on the other hand, it's, well, if it wasn't a divergence, then you'd have no room to go up on the RSI. So if you look for an MFI from over here, it's a little bit of a divergence, but not that bad. And from the top here, because people are saying, well, it's not just from here to here, this one, then this one, which isn't as much of a divergence, but on MFI, it's not a divergence at all. It's like exactly like the same. I mean, you could say a little bit about a divergence because the price is higher, but that's not really enough to count for much. So, but let's take some measurements on these. All right. So from this peak here, which I guess this is the point everyone's talking about, to current price, that is 539 days. So you're getting up close to twice as long as the other one. The price, say from current price, 54% gain, and you go from about 87 to 70. So a 54% gain, 500, I think it was 39 days, and 16% drop in RSI. All right, so to compare those two, a 70% gain on one from the divergence where they diverge, a 70% gain compared to a 54% gain, 300 days compared to 539 days, 26% difference compared to 16% difference. So it's not the same at all. I mean, it's so far apart that I don't even know. It was so, you know, talking about 600 days almost. You know, I don't know how much weight it holds, and MFI has no divergence. And then here, this isn't much of one at all. This is like I wouldn't even count that as being much of a divergence. If we talk about from this one to here, that's like a minor one that you just expect normal pullback type price action. Now look at some other indicators, because this is actually a little more concerning to me. All right, the MACD, that's a popular one. All right, you're starting to get this bearish crossover and a divergence. That counts as a divergence too. The lower high there and the higher high. I mean, it's not that bad, but you are getting a bit of a divergence and the crossover. So, I mean, you got a bearish cross here, and that was when we went from like 100K back into the 70s. So, I mean, you did get a drop after the divergence there. Here, you didn't get much of one at all, just kept ranging. But when we go back to the last cycle, when you had a divergence and a bearish cross, you know, it did kind of mark the top a little bit. And you had 3 red candles in a row right there, which is what we're getting now on the weekly also. So I would actually say the MACD from an indicator standpoint is is more of a concern than the RSI divergence. John's Crypto Therapy, he's one of my mentors, obviously. Early on, he's been an institutional trader before, and he said RSI is one of the things that institutional traders look at. So, if people look at it, then it does matter. I'm not saying it's totally nothing, but it's not an apples to apples comparison from the last cycle. And there's also other kinds of divergence. That's just the standard one. But here, we're going to look up this one. All right, the hidden RSI divergence. And from my experience, this actually works better. So it's when, to my understanding, it works better with like prices ranging or whatever. So if price, a bullish one would be if price makes a higher low and RSI makes a lower low. So that's it, just that simple. So let's go back to the chart and see if we see anything from that. So if this was a low, then it would be making a higher low from here to here and a lower low on the RSI from here to here. Now, I don't like to try to cherry pick indicators to prove a case, but this was a little bit of a low, 97, but not a true swing low. I mean, it's a minor swing low, I guess you could say. But there is a hidden divergence. I mean, and this is what my problem with divergence is. Even though it can be that now, price could keep going down. It can make the lower low, and that's the thing with a divergence. It can be a divergence until it's not. Price can keep going in one direction or the other. But there is some concerns, like I said, institutional traders do look at the RSI. I don't see it as apples to apples to the last cycles. The MACD looks a little more concerning to me than RSI, and I haven't really seen anybody talk about that too much. Walls, what's up, bro? So, and I'm gonna look at Medicaid, and I'll also look at OMI too. Now, all this is dependent on Bitcoin. That's why I want to spend some time talking about Bitcoin first. And I don't hold OMI, but I'll talk about OMI for a second. A lot of people that follow me in their Telegram, they like it and they hold it. So I'll take a look at it and give my opinion on it. And one thing that you hear, because I really am trying to be like unbiased here, and not have a bias that we're definitely going up, we're definitely going down, or whatever. Even though I'm partial to going up. You see a lot of things saying, well, the sediment, this indicator wasn't hit. We've all seen, I think, 0 to 30 traditional top indicators have been hit. And I think that does count for a lot. But kind of my point with saying all this is, if we start to see signs that look, this really seems bearish, like things could be over, and all those 30 indicators didn't get hit, we have to trust what we're seeing. And I'm going to talk about the candlesticks and so forth here in just a second. But, from a news standpoint, I try not to go off the news so much, but there is sometimes that I feel like the writing's on the wall. And to put it back to last market cycle, when Bitcoin was at around 36K, and it was really hanging on. And some people thought, it was going to hold and it was going to bounce up or whatever. And I'm like, there's just, regardless of what the chart is saying, I just feel there's too many other things going on that are about to push this price down. And I kind of feel that in the reverse now, that there's a lot of things going on that should suggest the market cycle continuing. When it comes to the 4-year cycle, so cycles should extend. Sometimes I take shots at Benjamin Cohen, but last cycle he said, he had a thesis of the longer cycle and diminishing returns. Maybe he was just one cycle off on that. It seems to me, and I've thought this for a while now, that the cycle is likely to extend into 2026. It's much more likely that you have an extended cycle, that it went longer than you would that it went shorter. It's also people, I think it's just kind of people's nature. They're very black and white. It has to be one or the other. It has to be we're in the 4-year cycle, or the 4-year cycle is shot. It's no good or whatever. And I think it's somewhere. It doesn't have to be like that. It can be somewhere in the middle. Like this can be like the cycle where it starts to unravel, and going into 2026 could be. And I'm not married to that idea. I'm not saying, you know, everybody hold everything, just be patient until 2026. We're going to have to do what we see, you know, on chart. But I think it makes more sense that it would extend out into 2026. And let me look at this macro indicator real quick. All right, so this is ISM. And out of all the macro indicators I looked at, this actually seemed to mark the Bitcoin tops like better than anything. So, and even like some local tops. Now, right now, it's going down. Now, just because it worked in the past doesn't mean it has to. And I've been pretty vocal about this, that some of these macro indicators that have been successful either in the past or recently, they can't all be right. But here's the thing about interest rates, because another thing I wanted to address, that like a lot of people saying, well, interest rates cuts are bearish. They can be bearish. It really depends on the context. I don't think this is the bearish context. It's not like economies all over the world are tanking and inflation is like it. I feel like this isn't that kind of situation where rate cuts are bearish in that case. But the point I'm getting at is with the rate cuts, that should make ISM go up. It should help the housing market in the U.S. and that'll help stimulate the economy big time, and that should help the ISM go up. So that's another point for it going into 2026. Last time I looked at the global liquidity into money supply, it still hadn't regained its uptrend, but it hadn't confirmed that it's continuing going down either. Because we all know M2 money supply, that has been another accurate indicator for Bitcoin. You know, September is normally a bad month. I was watching Crypto Banter recently. He's got some pretty good takes, and he had something that's based, I can't remember if it was on last cycle's high or the low or something like that, or the halving. It was all based off something. It was like 400 days into the future or something. And it was like that had lined up with the September dips on the previous cycle, and it was lining up with like now. So he was suggesting that maybe, you know, we get this dip 400 days after the halving, I think it was, and that we're just getting it a little bit offset to the left. So that could be the case. I don't know. But on the weekly, you know, this isn't great to get this many consecutive candles. You know, it looked okay. You know, this I had the range drawn. I've had it drawn in there for a while. I like to use the candle bodies here. I mean, you can use the wicks too. You know, it just kind of depends on your style. So you don't really want this. You know, you don't want consecutive bars like that trending down after, you know, a failed breakout to the upside. I really think that guy selling on Sunday night the $2 billion worth of BTC, I really think that he messed the market structure up, because this candle was up here. It was looking pretty good before he did that. And I know he used the money and pushed it, put it in ETH. And the reason he probably did that on Sunday was he shorted it on futures on an exchange. And he knew by selling 2 billion that he was going, you know, probably 100x leverage or something like that, that he knew if that was enough to push the price down. So, and then he moved it to ETH and then, you know, pocketed a bunch of money. But, you know, he may have thought, well, just Bitcoin's going to be fine, but it did, you know, it closed below the range, made it much more of a bearish candle. So then I guess, you know, day traders coming into Monday morning to trade, you know, they're looking at it kind of bearish. It's a continuation from the previous week. So, you know, it doesn't look great on the weekly. I'm not going to lie, but it's not the worst thing. You got a lot of congestion right here. Right in here, you've had a lot of price action, a lot of fighting going on right here. So this isn't going to be the easiest to break through. I can't remember how to invert the chart on TradingView. Let me look that up real quick, because I did that earlier. The gear icon, hit invert scale. I did it on my phone earlier, I think. I don't see how to, I don't remember. Anyway, when you invert the chart, because I do that to check myself sometimes, like, because I probably have a little bit of a bull bias. When I inverted the chart and looked at it, I was like, well, that looks bearish, which would be bullish the other way. So, you know, it's got things to stop it down here. This is going to be a kind of tough for it to get through. And then you got the psychological number of 1K. That could help give it some support. And that's if it continues to go down. Because I'm going to look at the daily here in a second as well. Matter of fact, I'll go ahead and look at the daily. Because believe it or not, the daily looks a little better to me. I know that sounds a little funny, and that's 3 minutes left in the close. Because today was not a good day. However, there's a saying I got from Al Brooks as well. Big candles start and finish trends a lot of time. Big candle, you know, that was bearish outside bar engulfing. You know, that is not a good sign. But then you get the big candle here. So could this be the start and this be the finish? And you get 3 pushes down. 1, 2, 3. That's a big number. So it is forming a wedge, even if the lines don't add up perfect. And you're getting a lot of big bars in here. Normally, this isn't really what I would expect to see so much for a trend down. I would expect it to come down out of this, break this range and form more of a consolidation pattern and then dump. I mean, these 3 bars right here, because we're on the daily, I don't think that's really enough. Now, if it broke through this down under this range and it formed some kind of triangle for a week, 10 days, 2 weeks, something like that, people were getting bored, the volatility was shrinking, you're getting little candle bodies, and then it broke to the downside, yeah, I would say, yeah, this isn't good at all. This is a little better, and I'm not saying it's the best, you know, but there's some reasons to think that we're bullish. Because I drew this zone right here, and you see where I'm getting this from the previous price action over here. And 106, that, you know, I wasn't even looking at the numbers, but 106. And I try to tell people that 106 was important because when we were over here the first time, we could not get a close on higher time frames above 106. I mean, you go to like the hourly and you can't hardly see a time close above 106. So 106 was an important level too. So there's been a lot of price action transacting here. This is not something that it's just going to cut through like, you know, a hot knife and butter. I don't think it's approaching this level. Now just say it does, and you know, it's a wedge pattern, you know, now just say it does bounce here. Even though I think it's possible for the cycle to go out into 2026, I still think that some of this is not the best. It's like when you look at these run-ups by Bitcoin. All right, look at where this low went once we went up. It went exactly to this high here, you know, and over here, this low, it didn't touch any of these, which is good. You know, you can say it came close to this right here. These gaps are important. And I've explained this in streams before. It's like, that's like what a lot of traders consider the breakout point. And that's where they'll put orders to buy or sell, depending on which way it's going. So if it doesn't quite make it down there and gets bought up before, that means that the buyers were eager and they started buying it before it even got there. When it goes and just does touch like that and wicks up, I mean, that's good. That's pretty good too, you know. That's what you see there. And then, and it happened like way later after we made the high. So it was 21 bars and we're on the weekly. So 21 weeks later. All right. Then over here, we got the same thing. The wick wasn't as long, but you see that with look over here to the left, you know, it doesn't even quite get there, but close enough, you know, probably in some exchanges it did touch. And from the time we made that high, 16 weeks. So went from 21. So the time got a little shorter and the wick wasn't as strong up. So this time we broke out. And, you know, I had said, and I probably talked about this before, when we got the breakout, closing above structure, that's exactly what you want to see. And that's great. But once we started to not continue to move up, I'm like, you know, this seems like more of a fake out at this point, like a fake range break. And it's probably going to come back and touch the top of this. And we'll just have to see how price reacts. And last week, it did that with this wick here. And you see this wick touches these wicks over here. But see, from the time, just say that high there, you know, it's only 5 weeks. and it did not wick up strong. Kind of the point I'm getting at with these things I'm showing is that the market is weakening every time it does that. It's like showing less strong bullish, price action, I guess you can say. So I think that assuming Bitcoin bounces here, that it will be probably the last leg, unless we just get some real mania phase and just all kinds of bullish stuff with the government and whatever. Then maybe it can push up to 200 or 230. But other than that, I've talked about before, there's a lot of technical analysis pointing to 140 to 150. To my knowledge, I don't know that anything was pointing to 124 as the top. Maybe because I think I've taken all these like bull flag measure moves, and they're all like 140, 150. So I don't know of any technical analysis measure move target that shows 124 as being the top. And you have a lot pointing towards 140, 150. And that would coincide and make like more of a blow off top scenario for Bitcoin. Now, if we don't hold this relative level here, I'm not saying the cycle's over, but I do think it's not good, because you have this nice head and shoulders pattern here. You could even call this a bull flag. This, a lot of these things, I was going to do this on this TA webinar that I'm trying to do. Patterns, they're good, but a lot of them are like the same thing. Like you call this a head and shoulders, you can call it a bull flag, you can even call it a cup and handle. It's more about what the psychology is trying to tell you with the bars or whatever. But the point is that if we fall back through in here, I kind of feel like all of that is kind of invalidated. Like the head and shoulders, the bull flag, whatever you're going off of, that falling like fake breakout and then coming back to that level in here and trading in here. I think that kind of invalidates those patterns, which isn't good. Some people may have a different opinion on that. Yeah. Hopefully we bounce. Hey, what's up, bro? So hopefully we bounce, and I'm still partial to the upside. My bias is still to the upside. I'll be clear about that. I know I talked about some people who flip-flop on Twitter, because these guys, they make these bearish posts, but then if there's a green bar, then they still say, I told you so. So I don't know, but it's human nature that your brain is going to weight the bad news better than good news. So you are going to subconsciously like put more weight on bear posts than you will on like bull posts that have reasons for it or whatever. And going back to the daily, like, is this a trend kind of move down? Because I'm always like, what does the leg look like? So what are the hallmarks of a trading range? Overlapping bars constantly changing colors, wicks, gaps quickly being filled, confusion, lots of different opinions. All right, so currently, let's see with this bar overlap between the last 1, 2, 3, 4, 5, last 5 bars, and if you don't count that one, 5, 6, 7, 8, almost 9 of the last 10 bars. This is just today's bar overlap. So that's a lot of bar overlap. You're getting quite a bit of change in colors in here. So if this was more, and that doesn't mean that you're going to get perfect red, that you have to get perfect red bars down continuously with no wicks, but this is a lot of overlap and a lot of change in colors. So if I was going to expect to break through a level or the end of a bull run or something like that, I would expect more of a trending type price action down. Anything can happen. This is just, from a probability standpoint, how the leg into the area of interest looks to me, it makes a really big difference. I mean, that is what I'm looking at basically. And this is a ranging leg. I mean, it doesn't look great on the weekly, and I think if we do bounce up, that this still isn't good. This is a sign of, in my opinion, of weakness in the market and a loss of like the bullish momentum. If we would have come down here and just that wick up, especially if the weekly candle would have closed up here before that guy sold the $2 billion or whatever, I think that would have looked pretty good. You come down, touch this. Now it's still showing some weakness. It's only 5 weeks after you broke out up here, compared to those other examples I showed you, where one of them was almost half a year before you came down and touched that breakout point. So I'm not going to sugarcoat it. I don't think it's good, but I don't think it means the cycle's over. And I've also explained the RSI stuff. Another thing I'm going to explain, I made a post about this earlier, but the CME gap thing. So the CME gap, this is the daily, or this is the weekly. All right, you see where I have these boxes. All right, we'll look at the daily. All right, you see all these gaps here. All right, and I'm not a CME gap expert. I mean, I know they exist. I know what they are, and I've kind of been like, it dawned on me because I'm looking at the daily and the weekly. I'm like, well, how are there gaps on the daily, but they're not here on the weekly? Because you see like bars or whatever. And I can show you a screenshot or whatever, go to a browser, but just take my word for it that we all know that, I think it's common knowledge that the CME exchange, the Chicago Mercantile Exchange, shuts down on the weekend. So if price pumps or dumps, you already see people saying, oh, but what about a CME gap? It's going to leave a CME gap, so it doesn't even matter. But on the daily, it shuts down for an hour a day, like from 5 to 6 or from 4 to 5 or something like that. So the theory behind a CME gap is if price goes heavily in one way during the weekend, that it leaves some kind of imbalance, and that the market needs to balance itself out, and it'll eventually come back there and fill the gap. And I think like 80% of the time they do get filled. And every site that I looked at talked about this in a weekly context. Nowhere talked about it in a daily. And the theory behind it is about a market balance, of imbalance or whatever, shutting down for an hour during a weekday, Tuesday afternoon at 4 o'clock in the afternoon, and there being a price difference. I don't think that lines up with the theory of the CME gap. Now, it doesn't mean that these can't come down here and get filled, but if they do, I also don't know that it means it's because of these gaps. I don't think they really hold any weight, as my understanding to it. And like I said, I'm not a CME gap expert, but where there is a CME gap is here, this close to here, so up to 116. So for all these people talking about the bearish CME gaps, well, these are on the daily, which, like I said, to my understanding, I'm not even sure they really count. And you have a legitimate one here on the weekly. And if the cycle is indeed over, then I would expect another leg up and a lower high and a strong rejection. And if that happens, then, we'll have to reassess things. But I wanted to go over that as well about the CME gap. Yeah, and we all see the stuff about Binance constantly selling, suppressing price. I mean, as long as they can get away with that, I mean, I guess they can, have real control of the market. One thing I don't subscribe to is people constantly saying this is the last dip, last shakeout. You don't know. A lot of people say that they don't know it was the last shakeout, because I've heard that like 6 or 7 times. There kind of goes back to what I said at the beginning of the stream. Nothing is programmed in. But like you said, a shakeout before the breakout. What I actually am looking for before a breakout is volatility to shrink, and price has been very volatile lately, which is more of another hallmark of a trading range. Not something that preempts a strong leg down for the end of the bull market. For a big breakout, I want to see volatility shrinking, price form some kind of pattern, some kind of ranging pattern, a triangle, something like that, and you start to get to the tip of the triangle and volatility shrinks and people start to kind of lose interest, and then the breakout happens. That's generally how it does. Everyone's saying stuff worse for stocks and crypto. Do you think the opposite will happen when we have a good month? Well, that's what I thought it was interesting. If you saw what I said a little bit earlier in the stream, when I said what Crypto Banter's theory was, and he referenced somebody else, and I believe it was from the halving, that it was like 400 days from the halving, you had a minor pullback or a leg down or something like that, and that coincided with this leg down we're seeing now. So I don't know, maybe there's something to that the leg down that you normally get in September was to the left a little bit. Then, you know, if you look at M2 money supply, which has been accurate as well, that suggests we go up in November, or excuse me, September. And it has, September is usually a bad month for crypto, but then the fall is normally good. So it was good in 2023. It was good in 2024. And, you know, now we're in 2025 when the cycle, you know, should be the best part of the cycle, and the cycle is more likely to extend than retract. So I don't, you know, I would rather, you know, the opportunity cost of selling your bags here and then missing that part. You know, I didn't stay this long and stay hang in there for this to sell now, right when the best part is going to happen. You know, if I sold everything now, you know, it's not like the gains I was looking for at all. So if it is indeed the end of the cycle, then I know that I will be able to make plenty of money shorting altcoins to the ground if it is indeed the bear market, and I'll make up the ground there. But I'm not about to throw in the towel yet at all. If you have spot, you know, you don't have much to worry about. You know, leverage, when I tell people or recommend doing leverage on alts, you know, for long term especially, I don't recommend really more than 2x. For larger caps like say SUI and Link, I have 3 and 4x. But other than that, the rest of them that I have leveraged, I only have 2x leverage. And this is why, because the things can be volatile, you know, and I had funds on the sideline, or some of the asset on the sideline that I could still sell and pad the position if I need to, you know. And I don't like to be in a habit of adding to losing positions. One thing that successful traders say is that losers add to losing positions and winners add to gaining positions, you know. So I don't try to make it too much of a habit of adding to the losing positions, but at the same time, I think, you know, we all know the kind of gains that alts can have and stuff like that. So I'm not about to get liquidated out of my bags at 2x leverage on some of these things, you know. Where are we on the Wall Street cheat sheet? That's a good question. You know, I would say disbelief probably, honestly. And I know a lot of people say that the sediment doesn't match a top, and it doesn't at all. But you know, if it's telling you that it's going down, you know, the sediment, it doesn't, nothing is programmed in. The sediment is programmed in. It doesn't have to happen that way, but it should. As a matter of fact, I was going to read that story again. I've read it in a few streams. It's in a book called Volume Price Analysis by Anna Cooling, and it's the best description, and it was written in like the 70s. This little story was, and it's a description about how markets and market cycles work, and it's probably the best explanation I've read, and other good people that I know have read it, and they thought that it was really good. Well, you know, the thing is, the way the market went up, how it went up, have a little breakout, and the breakouts weren't parabolic. It would just be a few bars on the weekly. Here, let's go back to get off this CME chart. You know, this whole cycle, you've had a few green bars up, nothing crazy parabolic or anything, and then these long ranging periods. So like the market almost resets itself during these ranging periods. So we haven't had some kind of, you know, huge parabolic move, but you see the legs up are getting less. You know, that was bigger than that one. I'm pretty sure more bars anyway. And then this one was bigger than this one. Now, you know, I wouldn't even call this one anything too much yet. But it's, you know, this one is bigger than this one to this point. So, you know, if we got a move up to just say 140 from current price, that's a 30% gain. That's not that much. That's not anything out of the question. And if you picture how bars would be to go up there, that's not anything crazy at all. So I don't think it's out of the question to go up to 140 or even 150. And that could potentially be the end of Bitcoin going up. You know, but with ETH finally breaking 4K with strong price action, it's only gotten rejected from its previous all-time high once. Bitcoin dominance is dropping, you know, looking very bearish, below 60%. I mean, that looks, you know, looks really bad. These are the conditions that we have been waiting for years. ETH to get into price discovery, Bitcoin dominance to start dropping like a rock. That's what we've wanted. And that's what we're getting now. So I'm not about to top out or tap out now, for sure. And Solana is looking pretty good. Even with everything this week, it may even close the week green. And I've seen some people have a theory saying they didn't think Solana coins were going to do very good from this point in the cycle on. Excuse me, because Solana had went up so much already this cycle. It has went up from its bottom, but it hasn't even gotten into price discovery. It made a new all-time high, but price wasn't accepted there and continued to trade and go into price discovery. So Solana hasn't even been in price discovery this cycle for something that's had such a good cycle and so much potential for the future. I would expect it to get into price discovery. All right, so look at us. I'll look at ETH real quick because ETH still looks strong, holding above these highs. Did we even get a back? So we got a back test to here. The wick went up. I had this trend line drawn in, which we are kind of getting some support off of it. This is a pretty steep trend line, so they don't hold forever, but it's not breaking below it yet. The ETH looks good, so as long as I actually kind of like, the way I'm looking at Bitcoin in a way, it can just go up 30% to that 140 level. I see the weakness. I see some of the indicator warnings, but I still think that it can get that other leg enough to give ETH enough room to run, enough to get retail excited about it, and then enough to let these things roll into altcoins and BTC dominance continue to drop. I still think all of that is in play. So I'll look at Medicaid. Now, all these things, these altcoins, they're obviously dependent on, the greater market. So this zone, Medicaid trades in a lot. This is a level of resistance. We know that around 0.22, 0.23 for Medicaid. Definitely a level of resistance. Buying at the bottom of the zone has worked pretty well. So we're breaking below that now, unfortunately. So if it were to continue down, it could find support here, which isn't that much lower. If the candle for the week closes here, which we're pretty late in the week, then I would expect Medicaid to probably go down a little more next week. And this is assuming the market doesn't completely dump. I don't want to keep prefacing that, but we know that's how alts are. But here's the thing. Medicaid comes down here and finds support here, bounces back up, and then look, great bullish head and shoulders. And the measured move off that would be way up there, and I'm all-time high. Yeah, for sure. Break into all-time high, and from current price, that would be about a 500% gain from saying it goes down here, and if you buy it in this zone and the move plays out, it's almost a 600% gain. So if Medicaid comes down a little more, I don't think it's the worst thing if it can bounce back and form this bullish head and shoulders. And that would be fitting because this level of resistance is the neckline, would be the neckline. So Medicaid, assuming the cycle continues, I think, I'm still super, super bullish on Medicaid. And the reasons are gaming has been underwhelming this cycle. It started out hot in the beginning when things first started to pop off in October 2023. That little run there, gaming did good. Medicaid actually didn't do as good at that time as a lot of other gaming projects, but all these other projects have such token dilution. Myria, Gains for a Living, OTK, playable games. Medicaid doesn't have token dilution. So that's one big thing it has going for it. I'm pretty sure it's the top dog gaming project on Base. It's on Base for one, just being on Base. Base and Solana have been the most successful chains, and they will be the most successful chains, assuming the cycle continues along. So a lot of points for Medicaid. And then we know the team. They're always doing stuff. They're doing everything they can constantly to try to upgrade the project, do more things. Just yesterday, they launched the Medicaid Max token. They're just always doing something. They're going to continue to do that. They have, connections within Coinbase. I don't know they're listed on Coinbase, but you can, buy it through there through the DEX, the way they have it set up now. So there's just so much to like with Medicaid that as long as the cycle continues, I don't have any concerns really about Medicaid. I'd buy it here. I mean, I was buying it this past Saturday, right along here at the bottom of this range of the weekend. I thought it was a good price, and I really think if that guy hadn't sold that $2 billion, that we may be looking at a different market structure right now. Kind of reminds me of when the Bybit hack happened, because it looked like we were about to go up, and then the Bybit hack happened, and that kind of changed the whole tide of things. So Medicaid, in short, it probably doesn't look good for next week. I'll be honest, but as long as we can find support around here, then I think that that's actually a better case scenario than if we would have just stayed in here and broken out, honestly. So OMI, because I know a lot of people who have OMI and follow me and that are in my Telegram, and I don't have OMI, but I don't FUD it or anything. I don't, OMI. A lot of people, it's so emotional and so controversial. So many people, talk to team this, they said that and stuff like that. Well, this is crypto. Like, teams do things. It's almost like they're held to a different standard than the rest of crypto, which is fine. I mean, I'm not saying that they shouldn't be. My personal opinion, I think Dan Crowther is a dirtbag, and I think that he's like big. Every time you see these pictures of him, he's like living this like luxurious life or whatever. So I don't think he's the most trustworthy person up there at the top. David Yu, I think he's very withholding to like the stockholders. And I talked about this in a stream one time, that the way the company's set up, because people have always said if you could buy stock in it, that would be great. Well, people have stock in it and they get dividends, and that's why he needs to generate money. And if you have a crypto project that generates money like this, it's a double-edged sword. It can be good because they have an actual product. A lot of these coins, they don't have any product, so VV and OMI has an actual product, but at the same time, he has overhead. Not just overhead, but he's got to get these stock dividend people their money too. So, there's some of those dynamics going on with OMI, but just on, and the main thing is with OMI, as a matter of fact, I look at coin market cap to show this, that the reason I got out of OMI mostly was I didn't like the sector it was in, and the market cycle. Things have their best gains in their first market cycle. NFTs are hard enough as it is, and I know some people, they're not real NFTs. You can still say it's in the NFT space. That's hard enough as it is, just the NFTs itself, and then the coin to go with the NFTs. Like, none of them have really been successful. Like, here's one here, Chile. So $380 million market cap. And it hasn't done well. It hasn't done anything. I don't know how it is compared to OMI on chart, but it hasn't done good. Ape, 420 million. And look, that doesn't look good. It looks really bad. So 380 million, 420 million, and OMI is like 100 million. So I think OMI has more going for them than those two projects fundamentally. So, I think this pump, my theory is that now that they're integrating the token more and going to be more connected to the crypto space, it's coming back to more of a fair market value. And from that standpoint, it can keep going. Now, it will be dependent on the rest of the market as well, and all those kinds of things. But on chart, so I'm going to go back in history here a little bit, because I thought this would be the bottom here when we were back here. And this wick right here, if you go down to like a 15-minute chart on this wick is really long. And what that shows is it was bought up so quickly when it got down here. And that's why I was like, this is probably, like, the demand here is so strong. This is probably the bottom right here. And when it came down here again, it wigged up strong again. And if you look on lower time frames, kind of the same theory I'm talking about, where it got bought up very quickly, but not as aggressive as before. So it still shows that it was bought up aggressively, but that is losing a little bit of strength. Then in here, you kind of see it didn't even get down there, wigged up, so these are all good signs. But then if you look at the timing over here, May 2024, This is when, you know, we had started to go down in March or something. Yeah, so here, the high in March. And so the market was just weak here. So as the market was weak and it got in this zone, you got this close here. I knew that wasn't good because you're getting bars just like closing in this zone now, and the demand is kind of exhausted itself. And then when this happened, I said, all right, this is like price discovery to the downside now. This is definitely not good for OMI. But when it's downtrended like it has and hasn't really formed a whole lot of market structure, the good thing is it doesn't form a whole lot to break through, so it can pump through it easier, if that makes sense. But what OMI's nemesis has been is this 200-day moving average. That's this green one right here. All right, so since it broke down here from that candle over here, broken below structure, it tried to recover and look, rejected. One, this was off the 20-week, but one count it. Just saw the 200 days. So that's one rejection. Two, got up above it a little bit, but we'll call that three. Had a surge right here, couldn't sustain. Now going back in this downtrend, 4, 5, 6, 7, 8 times rejected off of that 200-day moving average. And now OMI has firmly overtaken that. So that 200, I don't think it's going to come back down and go back below that 200-day moving average. So that 200-day moving average was definitely something that people were looking at when it came to OMI and selling off of it. I mean, I don't see how you can even deny that. So this candle here is pretty good. Let's see, just assuming it closes like this for the week, let's see if it's above its midpoint. Put that in a different place so we see it better. From the bottom of the candle, whoops, wrong. From the bottom of the candle to the top, this is the, so it's closing below its midpoint. So like by the book, you would say that's still not like necessarily bullish, but you know, it's a crypto altcoin. You have the thing with OMI is you have a lot of people hurt by it and they're looking out to get out for any pump. And I think that's one reason why it wicks up like this, because when it pumped, people are like, all right, it's up something, I'm just getting out. But it's high volume, that's good too, because that's absorbing some of this selling. And this is the week that I'm going to the daily and get a better look at it, because that looks good. When you get long wicks up and then it continues to go, and you see that in crypto altcoins sometimes, that's a good thing. And when I break it down even a little more on the 4-hour, this is where I think it looks bullish. And this is why you go into smaller time frames, you get a better look. And you could call this, you know, I was looking at it earlier. You could call it a symmetrical triangle, or you could say it's a ascending triangle. And the ascending triangle would be better. Ascending triangle on an uptrend is bullish. But within the triangle, the bull bars are much stronger than the bear bars. So that's kind of what I, you know, when breaking it down like that, this is a bullish formation for OMI. So, you know, it doesn't mean that, you know, it's going to $1 trillion market cap or anything like that. But locally, you know, OMI looks pretty good. Hopefully the market holds up and OMI will continue up, because just because I don't hold it, I'm not the type of person that I don't want to do bad. You know, I don't care. Like, I'm not saying I told you so about anything. I didn't. I got out of it. I said the reasons why. It wasn't because I think it's terrible or whatever, you know. But the problem with OMI, it's got these levels here that's going to be tough for it to get past. You know, but if it gets even up here, that's still a pretty big gain from current price. Because I think it can break this, just assuming we have a proper run for alts. I think it can break this, but it would be a little bit harder for it to break that. But that would still be a 600% gain, you know. And if it can break that, then, you know, getting up there, you're talking about a pretty sizable gain then. That would be tough for it, though, honestly. Unless the cycle extended well into 2026 and we just got crazy bullish sentiment and news and stuff like that. If we get a proper bull run and alts go up and stuff, then yeah, I'd expect it to run off and go into NFTs, because NFTs, they didn't just come up last cycle. Like, they were out in 2017, like crypto kitties, and so they made it from the 17 cycle to 21. So I think that NFTs can still have a run, but everything else needs to play out like it needs to as well. But more has been released than it was then too as well. And it's just how crypto works is things have its best gains in their first market cycle. That's just what it is. It's not that OMI can't get up to the all-time high, but it's got these levels that it has to fight through now. And I know that the 002 is going to be tough. A lot of people are buying it there. Like when you talk to people that were last market cycle, so many people are like, that's where they were buying it. And when it gets there, that's where a lot of people are going to sell it. So it needs a lot of volume. I think it needs the NFT narrative to come back, but it's not out of the question for it to get back to all-time high. It can happen. Randy's Whales came through. I don't know, because somebody has said that they thought this was like whales doing this or something like that. I don't really think so. I know Dr. Profit has a lot of money. Maybe I don't know, but I would have to say that this is just natural price action or whatever. $1 billion coming. I guess we'll see. 100 billion market cap. It would be like a top 10 crypto if that was the case. Cool. Some people think it's exchanges or bots buying OMI. The candles, when you look in the smaller time frames, the candles look pretty good. So I have to lean towards that. I think that it's a legit pump. You know what I mean? And I hate to sound like a broken record. The whole, obviously, it's altcoin, Bitcoin, ETH. They need to hold. Market needs to continue up. If that doesn't happen, OMI or no altcoin is going to be so successful. I don't care what IP they have or what narrative they have. No altcoin is going to do but so much with Bitcoin and ETH going down. I think OMI, if I had to say, I think that it would get to, assuming we have a proper bull run, I think it would get up here in the 002 range. That's where I think it would go. And that's not a guarantee. I don't really like making I give my best guess, but I'm more like, what does it look like going into that? So if it came up here, got rejected, formed some kind of consolidation pattern and broke out with some bullish candle, I'd be like, hey, it looks like we could break this zone here because of the way the move looks. To me, it's how it looks going into that area. So, but if I just had to say, I think that's reasonable that it would get here, but this is going to be a strong level. Even if it does break through here, it's going to take a lot. And, a lot of coins have these kinds of levels. Medicaid at 0.22. That's, I think Medicaid would break that, but that's a tough area for Medicaid to break. And it's in its first market cycle. So OMI is the only altcoin that has these kinds of resistance levels that it's going to have to go for. As of right now, I think the most likely scenario for BTC is around 140 to 150, somewhere in that range. And I think that's not, from right now, it may sound like that's a lot, but like I showed, it's like a 30% gain from current price. It would kind of be like that parabolic blow off, whatever move. So if the cycle extends well into 2026 and the 4-year cycle was just, completely shot, then who knows? It could keep going. 200 and 230, I think, is the max Bitcoin could get. That would like to be the max price that I would put, like the most bullish. Everything came together that 230 is the max it could go for a few reasons. But I think that 140 is more likely. I don't think the top's in. I do think there's some reasons for concern, though. I don't think it's a slam dunk that, don't worry about none of this or whatever. And I've been putting out for a lot of people, I haven't really put any new money in the market in quite a while. I put money in from trading profits and stuff like that, but because I've told people their altcoin season is not given. Bitcoin going to some crazy level, ETH price discovery, nothing is programmed in. So if you already got good bags, then I've been trying to put out levels of some of the assets we hold to sell and buy back lower and some trades to give people some more position on assets they like and some money for, to buy some things. But I do think that you do have to be careful, because you don't want to just go all in on crypto altcoins and this doesn't materialize, and then you're left in a real bad situation in real life. September, I'm not going to worry about September generally being red. As of right now, I think, I'm not saying it'll bounce next week, but I think it's more likely that we go up than significantly down more. So, yeah, I mean, that theory I talked about, crypto banter put out, and then the M2 money supply, they point towards going up. August is normally, post-halving, normally a good month, and that ended up not being a good month. So, maybe, August is normally good post-halving. It wasn't good. September is normally not good. Who knows? Maybe it'll be good. I think if September was just kind of like a wash, like we just kind of closed about where we opened, I think that would be a win going into Q4. And October is almost always a good month. And Q4 is normally good anyway. And like I said, 2023, 2024, I mean, you can go back 2020, 2021, 2023, and 2024, Q4 for crypto was good. For 2022, that's when we got the bottom in November. So you could also say that was good as well, because that was the bottom. We went up afterwards. So I guess at least you can say Q4 is an active month in crypto. So I'm still looking for higher prices in Q4. And I think that's the most likely scenario. And if you're holding spot, just chill and hold spot. If you got leverage, make sure you're protecting positions and so forth, because you don't want to get liquidated before it pops off and goes up, assuming that's going to happen. And if it doesn't, then you never had a chance anyway, because we haven't had any kind of real altcoin move up. And it's not guaranteed that it has to happen. I think that it still will, but it's not a slam dunk and it's not a guarantee. So don't over leverage yourself and don't put every penny that you own into altcoins. But you also can't win if you don't play. So if you sell everything and then it goes up, you definitely be feeling the pain then as well. So been on for a little over an hour. Go ahead and call it a day in case unless anyone else got a question real quick. I appreciate everybody for tuning in, and hopefully everybody got a little something out of this, and I'll catch you guys next time. Later.